When we think of money, we think of a resource that we can spend, save, and invest. And most importantly, you get to do whatever you want with it. But something disturbing is happening in the United States. President Biden is moving to curb investment into China, and he's going to do it with the G7 backing. And this could come as soon as May when they meet in Hiroshima, Japan. Basically, he wants to limit investments in key parts of China's economy by American businesses. He wants to cut the flow of money into China to prevent their industries from growing or competing. And this is another type of economic sanction. Now, obviously, this isn't good news. It is pushing the US and China relations deeper into a darker hole. When big superpowers they butt heads with each other, the whole world gets affected negatively. But ironically, this is going to accelerate the dollarization and take it to the next level if Biden goes all the way. So let's talk about the curbs. Now, these are being imposed on national security grounds and they're going to hit the Chinese tech sector. And we are talking about semiconductors, artificial intelligence, and quantum computing. But make no mistake, this will deal a significant blow to China's industry. In 2021, the US invested almost $60 billion in Chinese manufacturing, with a big chunk of it going into computers and electronics. So if a ban goes through, this will affect China's technology push, and it won't just be American money. The US, they are already briefing their EU allies on the investment curbs, which will last for at least 1 year. So Europe might be on board as well. And this is big because it is as good as economic warfare. And if you observe the butterfly effect, it can be worse than weaponizing the US dollar. When you tell private businesses what they can't invest in or what they can invest in, you are trying to channel their money away from China back to the United States. You are basically trying to channel away private sector money to grow your own economy. Now, on the surface, this sounds great. The US government doesn't need to print money to grow the economy, right? They can force private industry to comply. But there are two big problems with this. The first is the blowbacks you will get from China. And secondly, how this is a slippery slope that can evolve into cutting away all investment to China or any other country that you don't like. Now, we have heard of trade embargoes, but this is an investment embargo. We might be seeing the beginnings of the US government telling you where you can or can't invest in. And in the short term, this will be a win for the United States, no doubt about it. Imagine you're the average investor and you see this news. A few things immediately pop into your head. China is no longer getting US money, so their economy could slow down. And this means Chinese equities will take a hit, and I need to invest elsewhere. Which country in the world has the deepest capital markets? The United States of America. And that's why this ban flies in the face of Janet Yellen's claims. Now, she mentioned how these national security actions are not designed for us to gain a competitive economic advantage, but it absolutely does, because the dollar is the reserve currency of the world. Anytime there's a crisis, the default move from investors is to run to the dollar, even if the crisis is manufactured by the US themselves. And just the announcement itself is already affecting the broader investment landscape. It's not even official yet, and investors are afraid of investing in China. They are afraid of geopolitics. And here's the biggest fear investors have: they are afraid of economic sanctions against China escalating. Many managers are steering clear after seeing wartime sanctions erase the value of Russian investments. Investors are afraid of their investments crashing down if the US stops all money into China, which is not impossible. And let's flash back to June 2022. As part of the sanctions package, the White House banned investors from buying Russian bonds and stocks. So if you are an American investor or money manager, you can't access the Russian capital markets. And in the Treasury's own words, US persons are prohibited from making new investments in the success of Russia, including purchases on the secondary market. And the effects were obvious. It caused Russian stocks to crash further. Yes, the Russian markets have bounced back, but it is still over 25% down from the pre-war levels. And the same thing could happen to China. But the real damage will be to China's bond market. Now, if the US bans investors from buying to Chinese bonds, this will suck money away from China, and investors will have nowhere else to go but US treasuries. That will be the knee-jerk reaction. I want us to think of this as a vacuuming effect. Like many other countries in 2022, Chinese bonds have seen a multi-month sell-off ever since the Federal Reserve started hiking rates. Investors, they have been dumping Chinese bonds for months on end. And the reason is simple. When the Federal Reserve when they hike rates, this strengthens the dollar and the yield on treasury bonds rises. So the world starts to move away from riskier emerging market bonds back to treasuries because now the safe haven is yielding more return. So just imagine if the US bans investors from participating in China's bond market. What if Biden tells American money managers you can no longer buy Chinese debt? This will cause chaos for Chinese bonds and investors will rush into treasuries. Plus, it won't just be American money that will avoid China. Global money could get diverted into the US capital markets simply because of fear. And these will be the short-term effects. But once China recovers from this initial shock, the tables will turn against the United States. Remember that sanctions always have unintended consequences, and that's why we are witnessing the de-dollarization trend taking flight. The world is afraid of American sanctions. There's no other way to put it. So how can China retaliate economically? Now the first move will be ultra obvious, which is dumping what's left of their treasury holdings. Now China has been unwinding their US treasuries for over a year straight. They have gone from over $1 trillion in March 2022 to under $850 billion in February. Now, Wall Street legend Zoltan Pozsar has predicted this treasury dump, and it will only get worse because it doesn't make sense for China to roll their investments in US bonds. They will be essentially funding the West's own effort against China itself. So we can expect the US bond market to lose more customers in the East because China and their allies no longer feel safe holding dollar assets. And this will prompt the Chinese to start growing their own bond markets as well after the initial hit. And we can see the world's biggest bond market belongs to the United States, sitting at $51.3 trillion, but China isn't that far behind. It comes in second place with a $21 trillion bond market. So just imagine, if the US curbs investments into China, the global south will likely also shift its investments away from the United States because the dollar is being weaponized yet again. Now, money will likely flow into Chinese bonds or into neutral assets such as gold, but either way, the net effect could be negative for the USA, and this will accelerate the pace of the dollarization after the pain subsides for China. And one of China's biggest weaknesses is the size of their capital markets. It is not as deep as the US. Now, the American equity market is nearly 4 times bigger than the Chinese. And this is one big reason why the dollarization is taking such a long time to manifest. The world still uses dollars because there are a ton of places you can invest your money in. So just imagine if China gets cut away from Western investment, they will move to expand their own capital markets to compete against America. They are already making moves to reduce their reliance on the dollar for international trade. The yuan has overtaken the dollar as China's most used cross-border currency, and the yuan share for payments has risen to 48%, while the dollar has dropped to 46%. And this is big because when you contrast this to 12 years back, the difference is phenomenal. Back then, the yuan share was 0%, and the dollar was 83%, and that's how fast the situation has flipped in just 10 years. So the dollarization is not a myth, and it is starting with China's international trade. And if this continues, if more countries transact in the yuan, they will pump more money into the Chinese bond market and their stock market as well. So the investment curves by the US might be very bearish for China in the short term, but long term wise, it will force China to de-dollarize even faster. Now, my base case scenario for de-dollarization is in the decades, but things are already moving much faster than I expect. We are seeing a coalition of countries getting together to move against US hegemony. And it's a collection of both smaller and bigger countries that collectively have the economic power to push back against the system. And listen to this headline from Bloomberg. BRICS draws membership bids from 19 nations before the summit. And this is a very important development, and I'll explain why. Let's look through the list of the big boys looking to join BRICS. We have Saudi Arabia, Iran, and the UAE. Now, all these countries are big oil producers in the Middle East, and together, these three nations represent 20% of the world's oil production alone. And if they join the bloc, BRICS Plus will become a commodity powerhouse, especially in the oil markets. So if the US really pushes for investment ban, the rest of the BRICS nations will be observing this sanction. They'll realize that the US can also threaten to cut off investments in their own economies as well, and they will begin to push back. They'll start pricing their oil and other exports away from the dollar. They will accelerate more bilateral trade with member countries and also invest in each other's economies as well. And this is the big blind spot that the US doesn't see. Yes, China might lose money from the West and it will hurt 100%, no doubt about it. But the BRICS nations will adapt. Between Saudi Arabia and China alone, $50 billion worth of investments were agreed on, and two of them just recently came online. We are talking about Saudi Aramco's investment deal, building two refineries in China. They are taking stakes in Chinese refineries worth over $7 billion. So understand that investors will still find their way to the Chinese market. The BRICS nations aren't some collection of backwater countries. Now, I think there's still a warped perception that everyone outside of the West, they all live in a jungle or desert without running water, and that's not really the case. These are countries with economic power that can collectively surpass the G7. And according to Bloomberg, the BRICS nations are already outpacing the G7 when it comes to global GDP growth. If we look at the share of GDP using purchasing power parity, BRICS has already overtaken the West back in 2020, and this gap is projected to grow even further. But let's bring this home. What does this mean to you and me? How does this affect us? And let's say the United States really imposes an investment ban against China, and then China retaliates with their own economic sanctions. We'll be in a state of chaos, and in the short term, the Chinese markets could fall quite a bit and then normalize. The US markets might strengthen and then fall down and normalize again. But either way, investors will be freaking out because they know the chaos won't end. Once you start an economic war, both sides will keep firing salvos at each other, and the clearest winner will be gold. Now, just think about it. If you're a central bank, you know the world is extremely unstable today. The dollarization is not going to stop, and that means long term, more countries are going to be dumping their treasury bonds. But at the same time, the economic war between China and US is ramping up. So the Chinese economy might be in trouble as well. According to the Financial Times, this is why central banks are buying gold like no tomorrow. It isn't just an inflation hedge, it's a store of value against geopolitical tensions. And here's an interesting quote: gold is now a vehicle of central bank revolt against the dollar. Often in the past, both the dollar and gold have been seen as havens, but now gold is seen as much safer. And this tells us something fundamentally has changed. Geopolitics has shifted the world's perception to the point that gold is a better investment than the dollar. But listen to this next part, because it shines light on why further sanctions will backfire on the United States. Now, the risk for America is that its overconfidence grows, fed by the no alternative story. That narrative rests on global trust in US institutions and rule of law. But this is exactly what weaponizing the dollar has done so much to undermine. So it's this complacency and overconfidence that could lead to an economic war with China. And that's why if the unthinkable happens, a lot of scared money will flow into gold in a panic. Both the US and Chinese markets will look very risky, and investors will hedge themselves away from either. In fact, central bank gold buying has had the strongest start this year for over a decade. They have been stacking over 120 tons in just the first 2 months of 2023. They know they need to hedge against all these political risks. And it doesn't matter what the price of gold is, because if things keep escalating, the price of gold won't stay down. But let's understand why the United States is pushing for investment ban. When you are world power at the top, you want to maintain your position, and this is what hegemons do. According to the IMF, China will be the biggest driver of growth in the next 5 years, with their contribution doubling that of the United States. So if you're the US and you see this, you have a runway of 5 years before China catches up. And this is a scary proposition when you have been number one for over 100 years. And that's why an economic conflict is inevitable. It's bound to happen. Even if it doesn't happen this year or next year, it will definitely happen sometime within this decade. Definitely before China surpasses the United States. Now, Ray Dalio is saying that the US and China are on the brink of war and beyond the ability to talk. He's predicting the conflict to get worse, saying the hawkish political influences in the United States will exert more pressure on the relationship over the next 18 months because of the emergence of the 2024 election season. And Dalio admitted something big that the global south clearly sees. All things considered, I think that the greater provocations will most likely come from the American side. So don't be surprised if this investment ban becomes a reality. We could have a situation where investing in China might be seen as anti-American, and then all hell will break loose. And this might get crazier. One day, if things get bad enough, the crosshairs will land on gold and silver. There are already many weird opinion pieces of why buying gold is un-American. And I have a weird feeling that if gold prices rise high enough, we could revisit the good old days of 1933, guys, when holding physical gold is outlawed, or at the very least, you can't get them anymore. And that will be the end game. So you gotta prepare while there's still time. But let me know what you think in the comments below. Will Biden move ahead and ban investments in China? Will this fuel even more de-dollarization? Let me know in the comments below. Stay safe, be sure to smash the like button and subscribe as we navigate through these crazy times.